China devalued its currency this year and switched to a consumer-led economy. Slowing demand from the world's second biggest economy has left most African countries in a bit of a slump. But African leaders are hoping the China-Africa Forum will explore new growth opportunities.
This is one of the reasons why they have put industrialization on the agenda, because it would be in the interests of both China and of the African countries to start developing their manufacturing and capacity in using the commodities that we've got locally in order to industrialize Africa.
Despite slowing growth in both regions, China and Africa want to strengthen their trade relations. Trade between China and Africa was at $220 billion in 2014, the bulk of which is still in favor of the Asian economy.
We would like to see a restructuring of the export profile. Somewhere in the region of 90% of our exports to the People's Republic of China are primary commodities, and there is agreement in the relationship and the strategic partnership that we need to change that profile in the direction of the export of more value-added products.
Debt levels among African countries are also a concern. There are hopes that China will provide some relief for these countries.
Chinese policy banks arguably have been the single largest lenders to African states. Many of these loans are underwritten by sovereign guarantees, and many of these loans also are underwritten by commodities, i.e. high commodity prices. In light of the last 12 months or so, recent collapse of commodity prices, oil, solid commodities, a lot of the maturity and the repayments of these debts clearly needs to be pushed out.
China has emphasized that it will look at ways to help the continent deal with poverty reduction and skills development. Sumitra Nydoo, CCTV, Johannesburg.